Welcome, everyone. Thank you for joining the Surety Association of Canada's webinar on an introduction to obtaining release prior to payment customs bonds. My name is Sharon Clark-Kufis, and I'm the Vice President of Operations, and joining me is Steve Ness, President and Chief Operating Officer. I would like to start by letting you all know that you've been entered into the session in listen-only mode. This session is being recorded and will be shared with all attendees, including those who registered and are not able to join the live session. A link to the recording will also be posted on our website. I'd like to share just a few helpful tips. When you join the session, you should have automatically been entered into the webinar using your computer audio. If you wish to dial in by phone, please ensure that you have entered the audio PIN number, which is shown in the control panel at the right of your screen. Just like to take a moment to read our disclaimer. The information presented in this session is not legal advice and should not be relied upon as such. Those requiring legal advice should consult with an attorney. The views and opinions expressed may not necessarily reflect the official policy or position of the Surety Association of Canada or any other agency, organization, or employer. This session is for information purposes only and is based on the information which has been made available by the Canada Border Services Agency, CBSA. The Surety Association of Canada does not get involved in the business practices of our members. Any financial amounts provided in the sessions are for example purposes only. Just want to review the agenda with you. So we're going to start off just by providing a brief introduction about the Surety Association of Canada. We're going to talk a little bit about what is CARM, and then we're going to get into what is RPP. We'll also review changes to RPP security, as well as what is a surety bond. We're going to provide an overview and information on how to obtain an RPP bond, as well as key decisions that importers should be considering, as well as some helpful tips. And we also have some CBSA links that are included in the PowerPoint. And so when we send out the follow-up afterwards, those links will be available to you. So I'll just hand it off to Steve here if you want to give a brief introduction about our association. Steve.
Thank you, Sharon. Afternoon, everyone. So Surety Association, who the heck are we? We are the nonprofit trade advocacy association, and we represent the interests of the surety industry from coast to coast. And SAC members, we're actually quite inclusive. Our members account for 97% of all the surety premiums written across the country. And our membership is the primary surety firms, the people that actually write the bonds, and the surety reinsurers who back them up. And they also include the brokers and any other organization that provides a service or is in any way involved really with the surety industry, such as law firms, consultants, claims adjusters, and so on. We were formed in 1992. I guess we're just infants or maybe teenagers in the world of associations. And what we do is it's largely as any trade association, we do advocacy work, of course, representing the industry to governments and other key stakeholders. But one of our primary functions, which is what we're doing today, is to educate everyone about surety bonds, because we're not really well understood, the surety product and the surety industry. And so we spend a lot of time in sessions like this talking to people like yourselves, explaining the product, explaining the industry and how it works. And yeah, with that, Sharon, by the way, is going to talk to you about CARM and the details of the RPP bond and so on. I'm just here to provide the 50,000 foot level. So Sharon, I'm going to hand it back to you. You can start talking about RP, or we'll start off talking about CARM and then RPP bonds.
Great, thank you, Steve. So let's get into CARM. What is CARM? So the CARM is an acronym used by the Canada Border Services Agency, and it's for CBSA Accounts, Revenue, and Management. It's a new process for the collection of duties and taxes for commercial goods imported into Canada, and it's an online self-service tool facilitating accounting and revenue management processes with the CBSA. The portal enables importers and their customs brokers and or trade consultants to view transactions and statements of account, also known as SOA, and classify goods and estimate their duties and taxes. CARM also includes electronic commercial accounting declarations. You may have heard the word CAD, and so that provides the ability for corrections and adjustments for any imports that you're making as an importer. And on October 21st, 2024, the CARM client portal, and we use the acronym CCP, became the official system of record for imposing or levying duties and taxes. So what is RPP? So RPP stands for Release Prior to Payment. All importers are required to create an account in the CARM client portal or the CCP, and importers who have a history of importing commercial goods into Canada within the past 4 years will automatically be enrolled in the RPP program. The RPP program allows importers who have posted financial security to obtain the release of goods from the CBSA before paying duties and taxes and to defer accounting for the goods. So some changes to discuss about RPP security. So previously, importers or the customs broker could provide financial security in the following forms: cash, certified check, money order, transferable bond issued by the Government of Canada, or an RPP bond, also known as a customs bond. But this has changed. Importers must now provide direct financial security to continue to participate in the RPP program. Importers are no longer permitted to use the financial security which may have been provided previously by their customs broker. So CBSA has some new RPP security requirements. So this is important for importers to be aware of. There are 2 options for posting financial security. One is the written security agreement, otherwise known as a customs bond. And according to the CBSA, it's set at 50% of an importer's highest monthly accounts receivable, inclusive of GST, over the previous 12 months. And the minimum financial security is $5,000 per business number import account, an RM number. The other option is a cash security deposit, which is set at 100% of the importer's highest monthly accounts receivable over the previous 12 months. So we're going to get into a little bit more discussion about what the difference of the 2 of them are, and also on how you can obtain a written security agreement. So Steve, I'll hand it over to you if you want to kind of give a little bit of an overview about what a surety bond is.
Okay, a surety bond. If you actually can go right to the Insurance Companies Act, where it's a surety bond is defined. It's actually called surety insurance, which you'll see in a minute is a bit of a misnomer. But a surety is really a surety bond is a financial instrument where one party, that be the surety, guarantees the obligation of a second party, known in surety jargon as the principal, or in our case here, the importer, the obligation of the importer to a third party, and known as in the surety world as an obligee, or in our case, the Government of Canada or CBSA. And it's important to know that it is a guarantee. And what that means in practice is that the surety stands behind the obligation of its principal or the importer. In other words, the importer has the primary obligation to pay its duties and taxes. In the event they don't or can't or whatever, then the guarantee provided by the surety will step in and meet that financial obligation for them. So it's actually a secondary obligation. Next one. Okay. One of the, we've noticed through the last several months and even years that there is a lot of confusion between surety bonds and insurance policies. Understandable, because bonds are, of course, written by large property casualty insurers, licensed as property casualty insurers under by OSFI under the Insurance Act. And they use the same jargon. We talk about premiums and claims and loss ratios and all that. But there are some very important differences that will become more pertinent as we talk about these bonds and how they work. Insurance we'll start with. It's a two-party agreement. You have a car, you buy insurance for it. You have an insurer and an insured. And if you have an accident in your car, the insurer pays you net of deductible and everybody goes on with life. In the insurance world, premiums are actuarially determined. Insurance companies employ these horrible people called actuaries, and they sit in windowless rooms and they do these God knows what calculations that a 19-year-old male smoker has this sort of probability of cracking up their car. And if we charge this much in premium, then we'll make a profit. But they do, and then they don't make a profit. And these guys get to keep their jobs anyway, and I don't know why, but I digress. Point being here is that in the insurance world, losses are anticipated. You know that so many people are going to have a tree fall in their car, or damage to their home, or whatever, lose their roof. You're going to get a certain level of losses, and the theory in insurance is that the premiums of the many will pay for the losses of the few. Also in insurance, there's no recourse against the insured. If you have an accident in your car, you paid off, that's deal's over. By contrast, surety, well, of course, we have the three-party agreement, the surety company, the importer, and CBSA. And with surety, we kind of confound the actuaries a little bit. Premiums in the surety world are only a service charge. A surety does not anticipate losses, and they assess every risk, assuming there won't be a loss. If a surety looks at an applicant for a bond and thinks there's a chance of a loss, they're not going to issue the bond and charge more premium. They just will not issue the bond. It's a pass or fail. And in the surety world, the surety, if they're required to go in and meet the obligation of a defaulting principal, they do have recourse against that principal to recover its losses. Next one. Oh, incidentally, we say that surety is a credit instrument and not an insurance policy, and that is true, but it's a very special kind of credit instrument. It doesn't compare with others that you may be familiar with, like, for example, a bank letter of credit. There's some very distinct differences between a surety bond and liquid type security instruments, and Sharon's going to talk about that in some great detail in a moment. Give me the next one, Sharon. Okay, as I kind of covered all this already, but say bonds are underwritten like other forms of credit, pass or failed. It's much akin to the way a bank assesses someone for a loan. If the bank thinks you're going to default on the loan, they're not going to give it to you. And the surety will look at the credit worthiness. They'll look at their ability to meet the obligation that they're being that the bond is being issued for. Principals, in this case the importers, will be required to sign an indemnity agreement to agree to repay the surety in the event that they have to step in. And when the claim is paid, if the importer defaults, the surety will move in and fix the problem. In this case, pay the duties and taxes. And for that, sureties charge a fee or a premium. Just for taking on that risk. And I think I'm handing it back to you at this point, Sharon.
Yeah, thank you so much, Steve.
You're now an expert on surety bonds, so congratulations.
That's great. That's a great overview, Steve. Thank you so much for sharing that. So let's get into some more of the nuts and bolts as to why we're here today. Is to provide some explanation about a release prior to payment bond, or otherwise known as a customs bond. It is a type A surety bond. It guarantees payment of the importer's duties, taxes, and other amounts owed to the CBSA for the goods that it's being imported into Canada. So in the event that the importer fails to pay the amount due, the CBSA will ultimately make a claim under the importer's RPP bond for payment of these overdue duties and taxes. And the surety, so this is an important point, is the fact that it's kind of like a three-way partnership, like we mentioned, and the surety is kind of like your partner, the importer's partner. And so if the surety has got a claim and they pay those duties and taxes and make sure that the importer's account stays in good standings, the importer is required to reimburse or indemnify the surety for its loss under the RPP bond. So we are to understand that in the event of a claim made by the CBSA, that the CBSA will be exploring other options to collect any unpaid funds. So this would include, but not be limited to, outreach to the Canada Revenue Agency. So why use an RPP bond? Well, first of all, and perhaps we're a little bit biased here, but an RPP bond is a user-friendly and cost-effective form of security. But it is a fact. Sureties typically do not require collateral security to issue this RPP bond, just an identity, so an agreement from the importer that in the event of a claim that they would reimburse any funds that the surety pays on their behalf. An RPP bond also does not tie up the importer's cash. And the annual cost of an RPP bond is quite modest and much less than any other forms of credit. So for example, letter of credit. And we're going to get into that in a little bit more detail in a moment. So in terms of the RPP security amount, so according to the CBSA's memorandum D1718 about release prior to payment privileges, the minimum RPP bond security that's required for an importer to post is $5,000, up to a maximum of $10 million. The minimum cash security, there's no minimum amount, but the maximum cash security is the same, it's $10 million. So the CBSA also does not restrict any importer from providing additional security in excess of these amounts. So what is the cost of an RPP bond? And we get this question asked of us quite often from importers. So one thing that we can share is, and just to restate, is that the Surety Association of Canada does not involve ourselves in the business practices of our members, but every surety firm will charge a premium, and it's more of like a cost of service to issue that RPP bond. Each surety firm will decide what that premium charge will look like, and it can vary from surety firm to surety firm. So the cost of the bond is calculated by multiplying the bond amount by a percentage, subject to a minimum premium. And surety firms have shared that premiums are typically a small fraction of a percentage point of this bond amount. However, there may be a flat premium fee for lower bond amounts. So for example, if you're getting the minimum amount required by the CBSA of $5,000, there may be a flat premium fee in order to get that bond in place. If the RPP bond amount increases or decreases, oftentimes so does the premium. So how to obtain an RPP bond? So they are obtained through a surety broker. And the role of a surety broker is to help guide importers through the bonding process and to assist importers in establishing the business relationship with the surety firm. Most surety brokers specialize in surety bonding for commercial sureties, so like RPP or customs bonds, and they work with the insurance firms as well. Surety firms must be licensed to issue surety bonds through the Office of the Superintendent of Financial Institutions, also known as OSFI, or through a provincial or territorial regulator. So we do have a list of those regulators on our website. And so I just should share that some of the links that you're seeing on the PowerPoint today are embedded in the PowerPoint and will be provided to everyone through a PDF file following today's session. So SAC does offer an online surety broker directory. So any surety broker firm that is a member of our association has the opportunity to be posted and listed in our broker directory. And so if you went to the Surety Association of Canada's website at suretycanada.com and you scroll down to the bottom of the homepage, there is an icon or a button that says looking for a broker. And so this is where you can search for brokers. You can do it by city, province, or you can sort your results by the firm name. A couple of other ways to obtain an RPP bond is to contact your company's licensed insurance broker, because oftentimes they may be able to assist you in providing an RPP bond from an authorized surety firm. The other option is contact your Canadian customs brokers if you should have one that you've worked with in the past, as they may also be able to assist in arranging the bond from an authorized surety firm. Some information that surety firms may require from importers in order to get a bond is sometimes there's an application completed by the importer. This is typically online. And then there's also the identity agreement. So again, the agreement from the importer to the surety firm to reimburse for any funds that the surety firm should pay on their behalf in the event of a claim against that bond. Sometimes, depending on the bond amount, a surety firm may require an importer's financial statement. And then also too, if there's a lower minimum bond amount, so for example, if your bond amount determined through the CARM client portal is only $5,000, our surety firm members have advised us that this can often be completed through a quick write process. There are a couple of handouts that are included in today's webinar, and you'll see them in the customs bond checklist, and there's also a French version of that available to you. So is cash security more expensive? That's a question we also get asked quite often, and honestly, each importer will need to decide what type of security to provide to the CBSA is best for them. So either a written security agreement or a cash security deposit. The cost of security will be one of the factors in each importer's decision. And when considering the cost of cash security, importers need to include their borrowing cost. So if you don't have the funds available, there may be a fee that you have to pay. And also the business impact costs. So tying up the working capital and or the borrowing power of your firm. So we've just got an example here of the cost of cash security, just to kind of provide some explanation as to the difference between obtaining or posting cash security compared to an RPP bond. So assuming that the importer is required to provide a $10,000 RPP security in the CARM portal. So cash security, as noted by the regulations, is 100% of an importer's highest monthly accounts receivable. So the full amount is required to be posted. And according to the regulations, only 50% of an importer's highest monthly account receivable is required to be posted. So, and again, only a premium of that amount is charged by the surety firm. So based on the current borrowing rates, again, Bank of Canada, they kind of keep fluctuating up and down, but if the importer does not have the cash on hand, they would likely need to borrow the money from a financial institution. And so the cost of obtaining cash security would be at least 4.95%. And that's an annual charge. So again, to remind that the Surety Association of Canada does not get involved in the business practices of our members. And so that would include surety brokers or surety firms. But from the information that we have been provided, the cost of a $5,000 RPP bond would likely be at a fixed premium. And that ranges anywhere between $100 to $300. But again, the important point here is it would not tie up an importer's cash or borrowing power. So the importer must also consider their business impact of providing cash security to the CBSA. Cash is a scarce resource. Most companies constantly look for ways to maximize their cash and to access the cash in order to operate their business. So providing $10,000, for example, if that's the minimum amount that's required, especially for small and medium importers, that means less cash is available to your company to finance your operations or to grow your business. And this is the business impact and opportunity cost that each importer must take into account when determining which type of security to provide to the CBSA. One question that we get often asked is from importers is what's happened to my existing RPP bond? So they may have an RPP bond already in place that they may have already arranged directly with a surety firm. So some importers, in terms of how that worked in the past, it was always a paper bond. So they referred to, CBSA often refers to it as a legacy or a paper bond. They've also advised us that they've been scanned and input into the CARM client portal. So if you don't see your legacy bond in the portal, you should get in touch with the CBSA to find out where it's at. And note that since these bonds amounts were often determined in the previous regulations, the bond amounts may be required to change. So changes to these legacy paper bonds based on the D memorandum that's been issued by the CBSA is the surety firms would either need to issue an endorsement to increase or decrease the bond amount, or to replace the bond in its entirety with a new bond. Within the CARM client portal, depending on how the surety firm is interacting with it, which I'm going to get it to in the next slide, there may be some challenges with making changes to these legacy paper bonds. So what we recommend is to please contact your surety broker to discuss how to make changes to any legacy or paper bonds. So how is an RPP bond posted? So there's two options available. That's something in the CARM client portal. It is really important to understand is that each surety firm determines the best solution for their firm on how they're going to issue that bond to you. So a surety broker works with the surety firm, and the first option is to transmit the required RPP bond information via a bond application programming interface, otherwise known as API. Basically, it's like a connection between the surety firm's bond issuance platform and the CARM client portal. So basically, when they're in their bond application issuance platform, they'll put all your information in, the bond amount, and then it automatically transfers the information directly into your account. The other option is a surety broker will work with the surety firm to issue an RPP bond, which will then be provided to you as the importer, so that the importer can enter certain fields from the RPP bond into the CARM client portal. And once you've entered that information, a notification is then sent to the surety firm to review and accept or deny the bond information that the importer has submitted. I've not included screenshots here because the CBSA has recently provided really great webinars on how to post security within the CARM client portal. And so one of the slides coming up, which will be included in the PDF that you're receiving, will be a link to that recording where you could see the different screenshots within the CARM client portal on how to post or view the bond security that's connected to your importer RM account. So what happens if an importer does not enroll in the RPP? So importers who choose not to participate in the release prior to payment program must submit their commercial accounting declaration or CAD and pay duties and taxes in full to obtain release of goods. This is often referred to as a C-type entry. It is important to note that all importers must register on the CARM client portal regardless if they're going to participate in the RPP program. So some key decisions for importers to consider is whether or not providing cash security to the CBSA or an RPP bond in order to participate in the RPP program. Or if they choose not to participate in the RPP program, and to pay the duties and taxes in full upon the release of goods. So some comparisons or some questions to ask yourself about cash security versus an RPP bond. I've noted here, how to import, how important is cash to your company? Is the best use of the cash, something that you would like to consider in terms of paying down any debts or investing in the growth of your business? The reality is, especially in these times, is most companies don't have enough cash. So even if they do, providing cash to creditors is usually seen as an unproductive use of that cash. And each importer has to make that decision of how important their cash is and whether they can justify providing that cash to the CBSA. So just a little bit of a shopping list here and some helpful tips to obtain RPP security. Register, CBSA has held many different webinars, so we encourage importers all the time to attend an upcoming CARM client portal onboarding webinar through the CBSA. They also have some past webinars available on their website. Lots of great information there. Definitely importers need to obtain their business number from the CBSA and open one or more import-export business RM accounts. And then set up your CARM client portal user account. Again, a reminder, all importers must set up an account within the CARM client portal. Another thing to consider is appointing an employee or employees of your, as business account managers, otherwise known as BAMs, or your program account managers. This could also be your customs broker, if you've been working with one in the past, and they can continue to provide that support and assistance to you. So either speak with your customs brokers for assistance with obtaining RPP security, or you can speak with your insurance broker that you currently have for your insurance for information about whether or not they can connect you with the surety arm of their firm to obtain an RPP bond. Or you can visit the Surety Association of Canada's online surety broker directory to contact a surety broker who can help guide you through the bonding process. And again, there's a lot of useful links that the CBSA has prepared, and kudos to their team on pulling all this information together. I'm sure it was quite the task to do. And I should share too that this particular PowerPoint will be translated into French for those French-speaking importers across Canada, and as well, any of the links that are provided within today's presentation will also be directed to the French user guides that are available through the CBSA. And as I mentioned previously, there is the Did You Know release prior to payment privilege and CARM that was a recording that was recently done with the CBSA. And so we encourage importers to take a look at the resources that the CBSA has made available, because they're very informative. And again, they provide a lot of information and screenshots within the CARM client portal that will help you as an importer to manage your account. And Steve, so we're kind of wrapping it up here. We've been able to work through all of the information that's available from the surety industry. And so we do have, I guess, a few. We're really early. We went through this really quickly. We do not have a questions panel, and only because we know that there's lots of different questions out there. So what we will instead encourage people to do is, if you have any questions regarding obtaining an RPP bond or the presentation that we've presented today, to reach out to us either at our phone number or at our email account, surety@suretycanada.com. And for those who have attended today, and also those who were not able to join the live session, we will make the handout available to you by email, and it will also be posted on the Surety Association of Canada's website. So Steve, did you have any final thoughts to share before we sign off for the day?
Actually, I'm just going to speak to maybe a bit of the elephant in the room here. As I don't think I have to tell anyone that's on this call today that there have been some challenges in the account security for CARM and getting the portal up and running. It's good to see that the grace period has been extended, and we're glad to hear that. But there have been challenges. As an example, Sharon spoke about the legacy bonds and some of the problems in getting changes and cancellations on those. And that's just one of them. But we are, I mean, a lot of those challenges have been brought to our attention by some of the people, I think, on the call today, by importers and our own members. We are working with CBSA. We're trying to address those challenges, and we hope that by the time that the grace period does expire, we'll be able to make it go as smoothly as possible. But at this point, it's still a work in progress. So as Sharon says, questions or comments, whatever, send them to us at the suretycanada.com email address, and we'll do our best to answer them. And thanks for coming.
That's great. Thanks, Steve. Yes, so thank you so much, everyone, for joining us. And I do know that there's also some of our trade chain partners that have joined us today on the live webinar. And so we just want to express our continued appreciation in working with you. And of course, the CBSA, because this is a huge initiative. And so we're here to support. We're here to provide support as best we can. And so certainly this session, again, as a reminder, has been recorded. It's going to be shared with everyone and posted on our website. And for any other questions that anyone may have, feel free to reach out to us. So this does conclude our webinar. Keep well, everyone. Thank you so much for joining us today.